What's going on as far as talent at hedge funds?
The type of person who maybe was once attracted to this industry maybe has changed a little bit. It's kind of funny to say there's like a shortage of people who could like do these jobs, because that's not necessarily the case. But there is a shortage of people available to take the job because there's these long non-competes that the contracts require. And it's led to people getting, guaranteed compensation figures in the tens of millions. There's reports of people getting guaranteed payouts of over $100 million to kind of decamp from one fund to another.
Sure, the price tag has most definitely gone up, as has the bar for talent.
And there's a very specific way that they trade, and a lot of people aren't drawn to that.
What do we think the next 4 to 6 years in the hedge fund industry look like?
I have to imagine that there'll be
Is this the absolute best time to be in the hedge fund industry? For most, the answer is probably yes. In my conversation with Bradley Saacks, hedge fund journalist at Business Insider, we discuss all the exciting elements of today's hedge fund industry, how much it has grown over the past 6 to 10 years, what the future looks like, and why the talent war will only keep driving the industry further and faster. So yes, this probably is the best time. And for those who are trying to get in, give this episode a listen on how. Hi, Bradley. Thanks for being here today.
No, absolute pleasure. Thank you.
Okay, so you have recently written an article on the war for talent in hedge funds. That's where I want to start. For those who haven't read the article, or for those who might be watching from the outside of the stadium, what's going on as far as talent at hedge funds?
It's a really fascinating slice of the world right now. We've had these kind of mega funds become this big suction hoovering of talent throughout the financial services industry, and even throughout different parts of the tech world, with these really massive paydays and these compensation structures that have drawn in and kind of crowded out a lot of other players. But the kind of quote unquote talent war that's been going on in hedge fund land for a little bit really revolves around these big firms, the Citadels of the world, the Millenniums of the world, the Point 72s, and the kind of reality there is their model often, a feature, not necessarily a bug of the model, is pretty consistent turnover amongst their investor base. They run these really tightly risk managed portfolios, in where even if you're a great investor and great trader, if you do have a significant slip up because of some unforeseen market event or some risk factor you didn't take into account, you can lose your job pretty quickly, or you can lose your capital, and then that might send you looking for another job because you want to manage more money, or you're just not interested in sticking around for kind of digging out of your hole.
Yes, which those make news when that happens as well.
Absolutely, yeah, and when people are running these big books, these big portfolios, and they lose money, that's obviously a big deal as well. Like we've written about people at these funds who've gotten tripped up by big market events. It's sometimes now newsworthy when they stick around, right? Like it used to be, oh, this person lost so much money and they got fired, and now it's almost the reverse, where especially these kind of they're called multi-strategy funds, where they invest in a lot of different asset classes, a lot of different geographies. It's now almost bigger news when it's like you hear about these, someone who's lost tens or even hundreds of millions of dollars, and the firm says, we have so much belief in you that we're going to kind of like forego our like normal course of business or normal operating model and keep you around. But generally the war for talent is around these really massive funds that have accumulated a lot of assets, a lot of power, and a lot of people. And the kind of weird reality is there's this it's kind of funny to say there's like a shortage of people who could like do these jobs, because that's not necessarily the case. But there is a shortage of people available to take the job because there's these long non-competes that the contracts require. And there's a very specific way that they trade, and a lot of people aren't drawn to that. Like there's probably plenty of people who these firms would like to hire, but they aren't interested in kind of being so tightly risk managed, or they want to run their own fund. And so it's not so much that there's like no one out there to do it. I actually got a little pushback in I wrote that in one of our pieces of like, there's a shortage of people who can do this work. And it's like, I had several people get in touch and say, like, well, that's not actually the case. It's like these non-competes, and there's plenty of people who could get a job there who choose not to. But there is like kind of like I guess an artificial shortage, and because of that, it has caused the kind of price, as you will, of recruiting a new portfolio manager or a really good senior analyst to rise over the years. And that's kind of what this quote unquote war for talent's been around. And it's led to people getting, guaranteed compensation figures in the tens of millions. There's reports of people getting guaranteed payouts of over $100 million to kind of decant from one fund to another. It doesn't really have any signs of slowing down. These funds are continuing to be profitable and make money for investors, and um, almost all of the big guys are close to new capital because there's such high demand for what they do. So it's not this case of like they are like there's like a clear end point because it's getting too insane. Like there's definitely some pressures on them, but it's not this trend of talented portfolio managers willing to work for these funds getting paid astronomical amounts of money is not ending anytime soon, at least from my vantage point.
Are you seeing that it's primarily the rainmakers that are getting these, as you say, astronomical contracts, right? Liken it to sports in your article. Are you seeing that it's primarily the rainmakers? I mean, obviously, more than the engineers, but from our perspective, where we're placing a lot of quants or engineers that are supporting these desks, sure, the price tag has most definitely gone up, and as has the bar for talent. But from your perspective, in the perspective of this article on the war for talent, are you primarily referring to revenue generators and the PMs, or are you seeing that broadly in all of the hedge fund industry, there is a general war for talent and it's competitive in every vertical across a fund?
My writing is focused on the investing side of the business, the revenue
Right.
generators,
Sure.
as you said. But I don't think there's any doubt, and this is something like we've covered for years, that there is a battle over that top engineering talent, the tech side of it, the people who are able to build up these platforms that allow the revenue generators to be so good at what they do. And that almost is like a even bigger kind of like battle for talent, because that pulls in like the big tech companies. It pulls in these AI labs who are not only can offer like similar compensation, but can offer a different type of work that might be attracted to that type of talent. That world is just as competitive. We're definitely, or at least the astronomical figure, I think, is definitely talking about the investing side of it.
For sure.
Just because you mentioned the sports, like the guys that are getting these like headline figures that are kind of like making everyone's jaws drop are the like they are the Juan Sotos of the hedge fund industry, that where it's like, whoa, that is a
Indeed.
massive deal that only really goes to someone who's like not just like great, but like historically great, someone who's made money year in and year out and is just a machine, and checks all the boxes, mentors people and develops talent internally, and can scale what they're doing, and all that fun stuff. But there's absolutely a battle for talent. It's why the kind of ripple effects of these funds institutionalizing, becoming these platforms, not just investment vehicles, has been fascinating to watch from a people side. I think the main way that we've kind of seen it mature, I guess, is the build out of the training programs, the internship programs for both investing talent, but also this technical talent you talk about. Some of the biggest hedge funds in the world now are recruiting kids in their sophomore year of college to come and be engineers for them for the summer, and paying just as competitively as if you're going to do an engineering internship in Silicon Valley. And they're
Right.
saying, come to New York, come to Greenwich, Connecticut, come to Miami, where Citadel's based, be a part of these programs, come back this next year if both sides make sense. Like, and they want you in the door if it all works out at the age of 22, which is that's a pretty massive sea change from, I want to say 5 years ago, but definitely 10 years ago, where the main pipeline of people working for hedge funds was people who had already been somewhere in their career. They weren't looking to attract people fresh out of undergrad traditionally. Like, there's always going to be exceptions, and some firms have been building out these programs longer than others. But a hedge fund used to not be interested in training. They wanted kind of a developed
Yeah.
product that came to them on both the kind of infrastructure tech side and on the investing side. The resources that these firms have spent in the recruiting staffs they've built out that are like, engaging with kids on campus, the communication marketing staff that's built their brands to the point where, like, if I'm a 20-year-old walking around MIT's campus and I go to a career fair, it's like, oh, I know the logo of Google. I know what Amazon does. I probably now am pretty familiar with what OpenAI is. Do I know who Polyosny is? Like, that's a hedge fund that, like, I don't know if my parents necessarily know, but these kids, if they're in these if they're in these right programs, if they're going to certain classes, they definitely have heard of them, and that's
Yeah.
because of the way that these firms have kind of marketed themselves and branded themselves. They've tried to reach this specific audience for a reason, and then beyond that, the resources they've obviously spent on the training programs once they get kids in. And so it's been interesting to watch, and that's obviously a way that they're both, I think, trying to lessen the reliance on recruiting only from like peer to peer because that cost has gotten so high. But also, I think it's a culture thing. I think they want to say like this is how we invest here at Fund A, and if you want to work here at Fund A, like let's teach you from the bottom up instead of maybe retraining you after you spent 2 years in investment bank, maybe 2 years at a PE firm, and then came to us, or you went to an MBA program and have this idea about how to do things, but it's not really how we think about things. I would imagine it fits the same on the tech side, where it's like, hey, you came from Silicon Valley and you worked at this great company, and that's great, but we have very specific problems that are specific to a financial services company. Like maybe what you're doing at Meta doesn't really fly over. You're a talented engineer, you're a talented coder, but we need you to get up to speed quickly because we have these problems that like actively are making or losing money every day, which I think that's something that draws really talented people to this industry is there's like a scorecard on what you do every day.
Yeah.
And you're told, today was a good day. You made money today. Yesterday wasn't as good of a day, but tomorrow you have a chance to win it back. And you're spending all the time tweaking and trying to figure out where you went wrong or why you did so well. Like that's another important thing that I think every fund stresses is, hey, you had a good day. Do you know why you did? Like, can you repeat this process? It's been fascinating to watch the industry kind of evolve during my years covering it because it's gone from a very like founder-led, somewhat insular industry to this
Yes.
very institutional. It's now managing money for basically any large pool of institutional capital in the world, whether it's a sovereign wealth fund or a big pension or a big endowment. It's kind of hard to not have like a big hedge fund in your portfolio now because of the very specific type of exposure and return stream it generates for you.
Just to that most recent point that you made there, tying in the fact that it's changed from, as you say, it was kind of a taboo industry, and it was less early careers driven. It was more founder led. Do you think the war for talent, the fact that they're now trying to invest in graduate and undergraduate hiring, the fact that the pay scale has increased so drastically, the fact that the war for talent, and the competition, are these all interrelated topics, right? Are these all interrelated factors?
To me, the kind of like overarching general trend that like is quite obvious is like this broader institutionalization of the space. And when I say that, I'm not saying that like these long running firms were just like fly by night type operations up until a couple of years ago. Like there are plenty of firms that have like acted, very corporate, I guess, for a long time because that's
Yep.
but that's often how their founder wanted it to be, which still gets
Right.
back to like it's a founder led it is and it still is, but it's a founder led industry that's shifting into like what an institutional industry becomes. I think the main way, at least from like a firm level or like a people level, you kind of see that happening is one, like you look at maybe like the kind of earlier generations of hedge funds and what happened when the founders decided they didn't want to do it anymore. You had George Soros and Julian Robertson when they decided that they were done managing outside capital for whatever reason, like Tiger Management and Soros Management didn't like pass over to the next generation and they like kept managing outside capital. They became family offices and they closed down and people that worked at those firms went out and started their own firms and kind of like created firms in their image and that's how we get like people like the Tiger Cubs, the Chase Colemans of the world and LaFonts at Co2. And so it's like that was, I think, for a long time how the industry operated, which was these very dynamic, very smart, very very like domineering personalities and minds would run these firms and people would invest because of that person, which I think is the main thing, which was like, why are you invested in Tiger Management? Oh, I invested because I trust in Julian Robertson. He is the best stock picker I've ever seen. Gotcha. So if Julian Robertson retires, Like, are you, even if you believe he recruited a great team, like, do you necessarily trust them in the same way you trusted
Right.
him? Most likely not. When you invest in a place like a Citadel or Millennium or Point 72, which are run by, these billionaire founders who I think everyone agrees are like remarkably smart investing minds, people don't go into it thinking, oh, I'm investing in Millennium because of Izzy Englander. Izzy Englander doesn't manage money there, but he's built this machine that manages
Yeah.
money
Yeah.
and hired, hundreds of portfolio management teams that, and just built this structure really that is just light years different than like what Julian Robertson was doing at Tiger, what George Soros was doing, what really any like single manager that like kind of got a big name, David Tepper, Stanley Druckenmiller, what they like operated their firms as. And so you can kind of see like, I mean, Millennium sold a stake. They now like have outside investors. They built this like deep bench of management talent that they brought in from investment banking world. Like often it's a lot of like former Goldman partners, and you can kind of see this like very clear path of like whenever he wants to. Like my understanding is he's still quite involved in everything. But like when Izzy Englander maybe wants to step down, Millennium's not going to shut down because one, its investors aren't investing in him specifically, like they're investing in the machine. And the machine theoretically should keep running. Like he is obviously a very important part of it, but it won't break down in a way that like if there was a guy who picked the stocks for the entire portfolio but had like three analysts he really trusted, and that guy said, all right, I'm done, you guys take over. Like that would be a much bigger power vacuum, right? Where it's like, all right,
Yeah.
who's the one making the calls? Like, why do you get to say when we were the same level for how many years? So we just haven't seen really a ton of like successful successions in hedge fund world. Like Bridgewater eventually got there after like many kind of like off and on attempts where Ray Dalio would sort of step back but then come back in.
Yeah.
They kind of got there. I mean, Tom Sire stepped back obviously from Farallon, and they're still chugging along and doing quite well, but it's rare. But I think it's going to become a lot more common because this industry has become so institutional. And like specifically that part of the world, the big multi-strategy funds that are much more an investing platform. Like a place like a Millennium, a place like a Citadel look a lot closer to what maybe Goldman Sachs looked like pre-IPO than they do like what Tiger Global looks like now, which is this like investing platform that invests in like mostly tech growth companies, public and private, but it's still very much run by a pretty small team of investors relative to the amount of assets they run. Where if you look at even like I'm not entirely sure what Tiger Global's current AUM is, but it's multiples of a place like I don't know an Exodus Point, but Exodus Point is a multi-strategy platform. Exodus Point will have significantly more investment management teams, and they run a much different style of investing style than a place like Tiger Global does. And so I think that's why the expectation is that these platforms won't cease to exist after a founder decides they're not no longer interested in running it. Point 72, Steve Cohen initially got people attracted, back in the SAC days because he was such a great stock picker. He's now stepped back from trading. That hasn't stopped Point 72 from, they've raised more money, they're hiring more people. Like it's there. If anything, it's like, and he's said like, oh, I'm obviously still around. I'm still mentoring. I'm still running the business, but I will no longer be like trading my book for the firm. And, there was I don't know of any LPs who are like, oh, that's it. Like I was invested because Steve Cohen was managing a bit of my money. We think Point 72 is a great investment platform, and they do something that we want access to. So it's that sea change affects everything. It's like everything is like downwind of that to me, right? The focus on talent, the focus on building this pipeline of talent, because you need like sustainable sources of talent if you are going to become something that like doesn't just kind of like fade away in 15 years, right? If you build a business and you said, when I'm done, it's done, then you don't need to think about 40 years into the future, even 20 years, right? Like you can probably make it and be like, oh, we had a good 15-year run, made some money, everyone's pretty happy, let's cash out, call it a day. It's much different now, and I think that's like what, especially on the talent side, is like why we see kind of this like focus on like building out a sustainable way of like bringing in a fresh generation and not just like sitting on your hands and hoping like you can like pick people off opportunistically every once in a while.
I think that's it, right? In a line to me is what we've seen, the transformation over the last, as you say, maybe 10 years, 8 to 10, 6 to 10 years. There's a difference now between investing in talent and hiring, right? What you're talking about, the earlier days is just hiring the right people, making a few, right? It seems like we can liken this entire conversation to sports. So why don't we keep up with the analogy, right? It's signing the right free agents or making the right trades versus drafting and developing the talent from the beginning as well, right? So I think that's a really great way to look at it, and that's industry wide, as you say. How firms have invested in talent and taken talent so much more seriously from the absolute, like you say, ground up. So what is there to be excited about? What's the hedge fund industry currently talking about? What are people that work there excited about now in this current day and age of hedge fund investing and working in the industry?
Yeah, I think there's a lot to be excited about. I think the type of person who maybe was once attracted to this industry maybe has changed a little bit. Well, for one, hedge funds are like as in demand as they've ever been.
Yeah.
This style of investing that is quite popular, this multi-strategy style, is providing a return stream that these big institutional investors really can't access anywhere else. And for that reason, the biggest players keep getting bigger, and they keep hiring more people. And for one, that's opening up more doors. Like there's more people working in hedge funds now than there were 10 years ago. That's a good thing, right? Like if you are interested in working in this world, if you're interested in investing
Mhm.
money, if you're interested in working next to really smart people who are, not just like, kind of clocking in and like making sure like a big mutual fund and a 401k like does okay, but like you're actively trying to beat and like win things every day. I think it attracts a very competitive type of person. It attracts someone who, is can't really sit still. I think compared to maybe the type of person that it might have attracted though 10, 15 years ago, I think that it used to be an industry with probably more like, for lack of a better term, weirdos, people who maybe couldn't find a home in other parts of finance, but like still love to solve puzzles and were really fascinated and got really in the weeds on like very specific things. There are still a ton of people doing that type of stuff. Like there are thousands of hedge funds, and I've been covering this industry for years. There's no way I know a majority of hedge funds. Like there's just so many people running and doing weird strategies all over the world. So it's like there's obviously still plenty of room for these quote unquote weirdos, but I think for a long time, this industry, one, because the main backers were kind of like these like quirky family offices that like wanted to get exposure to like, some guy doing this weird thing that they maybe met at like some alumni event, and they're like willing to give them $10 million to go crazy and like see what happens trading these like esoteric options. It's a lot more structured now. And again, I don't think it's a bad thing, but I think that individual who is maybe like trying to do something quirky has maybe their path in other industries. Because again, it's if if you're building out this like pipeline of talent and you're getting younger and younger the people you recruit, I think that does create a little bit of it probably dissuades some people just because I think there's probably plenty of people who when they're sophomores in college aren't necessarily thinking about the job they're going to have. They're enjoying being 20 years old and living away from their parents. The industry has lost a little bit of like the Wild Westy type feel where people could. There's probably more green space. As far as like the excitement though, like these funds are so well. If you are someone who's like super curious and super ambitious and super competitive, I can't think of many better like industries for you because there's like a daily like how did you do grading based on like how much money you can make and how you did versus peers and how you did versus the market. There's also like kind of near unlimited resources at your fingertips at a lot of these places.
Oh yeah.
The budgets for data, the budgets for tech, now we're kind of getting into the also like we've talked kind of about the big multi-strategy firms, and this is a slight shift. Like the big quant funds have like everything you could want if you're some math genius. And so like, I think that there's a lot to be excited about on that front. Like I think a lot of people get very excited about AI's potential across industries. A lot of these funds have been doing machine learning AI techniques for years, and like are very much like on what I would consider to be like kind of the forefront on like using these techniques in markets and investing techniques. And I think there's a lot to be excited about working within that space. I think it's a very stressful job in many ways. Like I think it requires a very specific temperament. But I think people who like it, who maybe are a little bit more type A, they fall into it and they really love it. Like I think the toughest thing probably that the really big platforms will have to solve for is kind of both keeping the culture that they want and kind of sticking to that core belief of like underperformers do need to kind of be cycled out, because I think they're going to find as they build these like pipelines of talent of like really driven people who, have kind of been superstars their whole life, that like it's going to be tough to potentially like move someone out of the seats, because that's what the model calls for. And like, how do you think of a model where you're not just like pushing out people because it was a bad quarter? There's a very specific culture that a lot of these firms have that is both unique to them, but also it kind of rhymes, right? Like there's a reason that like I don't think anyone's like considered to be like some like bohemian place. Like it's all like a very driven. We're here to make money type culture.
As much as Ray Dalio may go to Burning Man.
Yes, yeah. It's like the founders can do that, right? If you're fill in the blank PM number 58. I don't know if you have the same
Maybe not.
the same latitude there. Yeah. So, but
Yes.
I think there's plenty of people who are excited about this, and the industry's only growing, is my understanding. I think there's a lot of capital out there for especially the biggest firms. I just think that it's gotten much harder to launch a new firm as well in the kind of traditional way. There's some of these platforms are experimenting with like basically like offering you know little pockets of money to people who want to spin out, but they're kind of still controlling them in a way. So like I think it again it probably like dissuades some people who maybe would have been drawn to the space 15 years ago, where they could have started their own little like $25 million hedge fund and like hung out, traded some weird stuff, and made some money, and like had some good time, and have been interesting thought exercise, and like there would have been like three family offices that gave them money. I don't know if that person really exists anymore, but that person also might find a home somewhere at one of these platforms on some team where it's a part of like a bigger investing group, but they still get to hang out in the corner and do their weird thing. If as long as they're like, profitable, people are going to be interested in what they're doing. But a lot of the like edges of the map have been like filled in, right? Like there's the like kind of green space maybe there used to be isn't as present.
Really great way to put it. You need to know what you're signing up for, right? Given the intensity of the industry, but there's no better time to want to be in hedge funds as far as the tools, the opportunities, the size of the industry, the investment opportunity in today's day and age, right?
Yeah, absolutely.
So I think that's a really great way to look at it. So with that, what do we think the next 4 to 6 years in the hedge fund industry look like?
I have to imagine that there'll be some, and I think it's kind of come this way in bits and pieces with the build out of like these internal pipelines and firms being more willing to like allocate some of their capital externally. I think there probably will be somewhat of a leveling off of the war for talent. That doesn't mean that again, top free agents don't go for like top dollar. But like it feels not completely unsustainable, but it feels like firms are getting maybe just sick of the headlines and like sick of having to like call their
Yeah.
LPs to say like we're not just like blowing your money on nothing. But I like from my vantage point, I can't imagine a world where the big kind of don't continue to get bigger. I wouldn't be surprised if some older founders stepped away. Like there's been funds that have been around for years. A lot of these, or not years, decades, and a lot of these places have kind of already laid out either who is succeeding them or have built out these like bigger management benches that will like obviously kind of take over the platform when they leave. I think of like Elliott Management, Paul Singer. He's identified his like kind of right hand, Jonathan Pollock, as like he's going to be the next in line. And Elliott's this massive investment platform now that's like absolutely not going anywhere. Paul Singer retires tomorrow. Like Elliott's going to be just fine, and the people who are investing in
course.
Elliott are not running for the exits. I wouldn't be surprised if we saw movement like that in the coming years, where and I think what comes with that would be a much more institutional feeling industry. And kind of like with that, like we've kind of already seen the first seeds of like hedge fund M&A, which is feels very strange because it doesn't really there's not really been a precedent to it. It's kind of been traditionally, I guess, when like a fund would like kind of like assume another, it would be like someone got in like some bad trades and they needed someone to kind of take over their book. Ken Griffin famously has done this with A few
Yeah.
places, Schoenfeld kind of took over like Folger Hill's Asia business back in the day. Like there's some like one-offs, but in the past, I guess now 4-ish years, like Millennium and Schoenfeld almost kind of joined forces. Millennium now is going to be the only capital in Jane Global, which is run by the guy who used to be one of Millennium's top investors. And I wouldn't be surprised if we kind of saw that type of activity happening more and more going forward. Like that is, I think, a sign of a maturing industry is when maybe some people get squeezed because they're not boutique enough, but they're not large enough scale. So it's like they're kind of caught in this weird middle and they have to choose what they want to be. I wouldn't be surprised if we see people who are running kind of like single manager funds. We actually already see a good bit of this. Single manager funds who say, it's really hard doing this. I'm running $1 billion and fill in the blank big platform is offering me the chance to run 2 billion and I got to bring my whole team and the economics are pretty good for me still. And I don't have to do this annoying like back office legal stuff or regulatory stuff or marketing stuff. I can just like invest and do the things I like to do. And we already see a good bit of this. So it's like that I think probably picks up too, where I wouldn't be surprised if the total number of hedge funds comes down in the next 4 to 6 years, but I can't imagine the industry overall AUM going down. And I also
Yeah.
can imagine like the industry overall headcount going down. Like I think these, even as like there's probably plenty of things within every company where AI and various tech tools can automate and replace people. But these funds are just in constant demand of people and keep growing every year to the point that I just can't imagine a world where in 4 to 6 years it's like, oh, and headcount fell 10%. It's like, no, I would take the opposite of that for sure.
Yeah, I tend to agree. And I think there's investing strategy around what I'm about to say, but also I think kind of feeds into the potential for growth of the industry. Everything nowadays is about data, right? We work with so many hedge funds, and every investing strategy is the amount of data at your fingertips, traditional data, alternative data, right? So like the size of data availability in the world is only increasing as well, right? So as there becomes more stuff out there, there becomes more opportunities to invest, and that's what hedge funds do, is they capitalize on those types of opportunities.
Yeah, absolutely. No, I think the hedge fund industry probably can be synthesized in like pretty clear or easy terms of like they want to consume as much information as possible faster than other people and like make decisions faster than everyone else. Like that, like they want to take as much as they can in, understand it all faster than you, and put it to work, whatever that understanding is in the markets. And so yeah, if the more like every day there's new data sets, not just one or two, but like, however many whatever absurd number of data sets being created every day that is informing these really, really smart firms that have built out systems and algorithms and data cleansing and science tools that I think of like, when I hear friends talk about like day trading, I'm like, you guys think that you got a leg up somehow on like these places? Like, maybe you're just playing with some house money and you're hoping that like a stock goes up, but like this idea that like you're gonna, outperform someone running a mutual fund is kind of funny. It's like these are very sophisticated places, even at the
Oh,
lower
yeah.
end of asset management, much less like these guys who like are obsessed with every little tenth of a cent they could earn. Um, so yeah, the more data that's out there, and obviously every AI and tech advancement that comes along, there's more that's created. It gives hedge funds another avenue to kind of make money and outperform the market and beat the maybe retail traders sitting on the other side.
Just to give you the last word, because you teased it a little bit, give me a 2-minute bite on how you think the tech advancements and AI is going to enable this growth of the hedge fund industry that we've just talked about for the last 35 minutes. How is it going to take it further?
It makes everyone smarter, right? Which is kind of again a part of like what a hedge fund's DNA is about, which is like we want to be the smartest investor out there. If we have this tool that, from everyone who's like very tech enabled out there, I'd take their word for it because that's not really my world, but they're saying this is like the smartest technology that's ever come out. That's only going to help these people who want to be the smartest person in the room in every room they're in. And it gets back to like these firms want super, super curious people who like really can't sit still, and they like being challenged. And so like if you're working at one of these places and you have the ability to like kind of fact check things fast and you haven't been able to fact check things ever, or pursue ideas that you before maybe would have taken like a couple days to like gather the data and like compare and contrast and all that fun stuff. And now that process takes a lot less time. I think it's a good thing for hedge funds. Now, it's a world where there may need to be less people doing some of that analysis that maybe can be automated away, probably. But I think, again, it gets back to like, I can imagine that a lot of these firms are turning over or looking at their staff and saying, let's get rid of like all these investing people. We no longer need them to this type of analysis. I think, if anything, it lets them, do more what I would consider creative things, like the things that, as my understanding, like AI can't do yet. Like asking the questions and making these associations that really only a human with plenty of market knowledge can do. Now, I recently wrote a piece about this like kind of like new wave of AI startups that are somewhat trying to delve into more of like the human side of like investing and looking to partner with hedge funds with like some of them have the very explicit intent of replacing people. Like they're saying, I don't think you need this person who's doing this type of analysis for you.
Wow.
We can do it. I think the tough thing for any third party trying to sell that is another thing that a hedge fund really hangs its hat on is we're different than the guy across the street and we can do things better. And so if you're selling to that guy, I don't know if I want you also running my analysis as well. Now, these firms I'm sure cater and tweak their offerings for the funds that they're in. But I think no matter what, these like big platforms, these big investing engines are going to need a lot of human creativity. If you just want to track the market, I think a place that's a lot probably more likely to potentially lose jobs would be maybe these like large cap mutual funds that kind of exist in our 401ks, where their goal is kind of making sure you don't like miss out on like the big market moves. And yeah, it's great if you beat the S&P, but if you're at the S&P at the end of the year, like no one's upset, right? Maybe those places don't need as many people if the analysis doesn't need to be as constant, if you don't have to constantly question your theses. These places that like the way they make their money is beating the market and beating the guy across the street and
doing it faster
and doing it for a longer period of time and doing it constantly. Like it's not just like I had a good year, I can maybe coast this year. It's like no, there's a constant demand for like outperformance all the time. They're not going to be like, oh, we can replace this person because we taught this person's work to an AI. They're going to say, okay, you no longer have that on your plate. Let's get you like ramped up on something else that can help us beat the market. Go be creative and find a place in the market where no one's looking, or like, what are we missing? Like they're not going to throw away any expertise is, I guess, the way I describe it.
And use the data that's at your fingertips or out there in the universe to help you inform those decisions.
Absolutely. Yeah. So yeah, I think for a lot of industries, AI might be very scary. And I mean, I don't think it should be in journalism, because I think the thing people rely on from journalists is new information, which, by definition, an AI shouldn't have if, it's not out there yet. But
Right.
There's plenty of people in my world that are concerned about it for, I think, good reasons. And, I think there's been plenty of industries across the world that, or across the kind of business world that have, you've seen leaders say like, this is, potentially going to be a massive sea change for how we think about hiring and all this. I don't think we're seeing that in hedge fund world yet. And I'd be surprised if we do.
Let's leave it there. You've pulled back the curtain for those that haven't seen it, and for those who are involved. I think you've summarized it very nicely. So appreciate the insights, appreciate the perspective. And yeah, I agree with you. I think that this is just a new iteration, new generation of what the hedge fund industry looks like. And there's way more that we might not even know or be ready for yet. So thanks for being on.
No, thanks for having me.
That's all for today's episode of Searching Smarter. If you found this conversation valuable, be sure to subscribe so you don't miss an episode. Until next time, keep searching smarter.